It's been a day of strong policy action coming in many of those global central markets there. You have seen the ECB, China and Bank of England come out and make a lot of measures into the markets there, and that really has turned around the markets there. Look at the gold prices, and we have seen a bit of a decline coming in for that. We were trading at around $12 on the higher side, but at this point in time the gold has reacted to the ECB interest rate cut, and there you can see 16, so just about a $1 gain remaining into the gold prices right now. The gains though have been quite immense in case of the crude prices, and the base metals also have reacted on the higher side there. Let's take a look at the crude prices first. The Brent crude is holding around 2.5% on the higher side. That's NYMEX crude nearly 0.5% on the higher side. 102 and below that is how Brent crude has reacted. So some bit of a profit taking coming in for that one as well. Remember, most of these commodities had run up in anticipation of action coming in from China, Bank of England and ECB as well. And all these central banks more or less really have delivered into the markets today. A quick look at the base metal prices also. We saw copper prices trading 0.5% on the higher side ahead of the ECB move, and some steadiness is how you have seen that commodity continue to hold into the markets there. Let's go across then to Vijay Bambani. He's author, CEO, BSPLindia.com, and Chirag Sheth is VP, Latin Manharal Commodities, and they join us here in Mumbai studios. Vijay, hi, let me get a sense from you first on the kind of moves that we have seen coming in on all of these commodities after the ECB has cut interest rates. What's your sense? How could we be going into the US session today?
In the absolute near term, Manisha, I think commodity prices will get marked up. But I don't think there would be a runaway rally as such. I don't think aluminium could go to 108, 110 odd levels where there's a breakout indicated. Copper is leading the way up, but it'll have to remain above 435 to actually trigger a confirmed breakout. Crude will have to trade consistently above the 4850, 4880 band to build up the rally that it has seen in the recent sessions. So I would want to trade on the long side absolutely for today with the end of the session in mind. But I would not be gung-ho, and I would not really buy in very large lots.
Chirag, what's your sense, especially in case of crude prices? We seem to be holding quite well in that space there. Do you see more gains coming in, especially after the ECB has moved the street expectations?
Yeah, I think there are two things that could help crude prices go up. First one is that the ECB has gone ahead and cut the rates. So it's kind of not a direct stimulus but an indirect stimulus providing to the economy. And second, I think what is really helping crude oil prices over the last 1 week or so is this brewing up of hurricanes in the Gulf of Mexico. And I think today we'll see a sharp drop in the inventories, and that could actually push further. So there are these two strong events in the market which could actually help crude prices push towards $90 or so.
Let's also get in a voice from London, and Mr. Balwant Maru is CEO London Metal and Commodities, and he joins us on a phone line from London. Mr. Maru, hi, I appreciate you taking time out for us. What's your reaction? How do you see the base metals reacting now to Bank of England, which have raised the asset purchase target to £375 billion, China cutting 1-year lending rates, and finally ECB also coming out with an interest rate cut today?
So these are very good signs, but they will not have a great impact on the metal market immediately. It will take some time, although it will make a little life easier for Portugal, Spain, Italy and Greece. But so far as the metal market is concerned, it will not have a great impact immediately.
Mr. Maru, one thing that the markets really have been worried about is a hard landing coming in from China. How big is the concern that according to you?
Well, so far as China is concerned, we are awaiting for 2-3 other figures from China. GDP figures are also coming very shortly, and these inflation figures, which is known as CPI, they are also coming, and then trade balance will also be there in next 2-3 days' time. So these 3 figures are very important, as well as tomorrow we are expecting good or bad figures from America, that is non-farm payroll. And they will also show how the economy is doing in that particular part of the world. And so therefore, at the moment, what we can say is that all these things taken together, suppose everything is positive, then all things taken together will have some impact, but only after, say, about 6 months or so, not immediately.
Mr. Maru, of course, that's a long term that you are giving out, but for the near term, how do you see the metals reacting, especially aluminum,
nickel? Well, there is always, wherever such good news comes, there is always short covering, and market goes up. But then again, it comes back to the basics, and basics are that there is a lot of stock in the LME warehouses as well as outside LME warehouses. Demand is very slow. So far as the European Union is concerned, the demand is very, very slow here, and still industry is doing very badly. In China also, still industry is not doing very well. Steel industry is also not doing very well. So, in fact, most of the items which are there on the London Metal Exchange, you find that the demand is very tardy at the moment.
Absolutely. Your point is well taken, Mr. Maru. But among all the 6 base metals that markets do tend to follow, which one do you think has a better chance of a recovery faster?
Copper.
Okay. And what kind of a range are you working with onto that one?
Well, at the moment, you can say it can go up to 8,000. But it will, as I have mentioned, it will take some time. And depends upon numbers coming from USA.
Mr. Maru, just a last final question to you, and that's about aluminum and nickel, because these couple of metals also have seen some strength in the recent days. They had declined quite sharply.
They all follow. So far, the aluminum is concerned, there is about 5 million ton stock on the LME.
Okay.
But at the moment, it is all tied up in financing, and therefore not much available in the market.
Okay.
But again, so far the aluminum is concerned, stock is too much there. Nickel always follows copper, but copper comes first.
All right, Mr. Maru, appreciate you taking time out for us. Thank you so much for giving us time. So that's the words coming in from the London markets there. The reaction, of course, the knee-jerk reaction has come into the base metal prices. But as they say, the full effect of all of this would come in 3 to 6 months. Till then, you would see more jittery markets coming in here. Vijay, for the very near term though, for today, how would you want to trade the base metals?
I would like to buy the dips and aluminium, which I recommended even yesterday. I would buy the July futures all over again at 106.25. I would hold these long positions with a stop loss at 105.5, and I would attempt to book profits between 107.25 to 107.5. Where nickel is concerned, that is also showing signs of waking up from its slumber, so to say. So I would buy the July futures at the 938 levels, which is marginally lower from where it is right now. I would hold these longs of 938 with a stop loss at 933. I would attempt to book profits close to 945 to 948 levels or end of the session, whichever comes first. Now, a word about the exposure levels. I think exposure needs to be very, very calibrated, because this is the initial reaction to these rate cuts, and I do expect the primary cause for this uptick in prices to be bear covering rather than exuberant based fresh long position. So one is barely trying to exploit an opportunity which is presenting in the short term. Don't bet the bank on this.
Chirag, what's your sense? For the very intraday market, how would you be reacting to the base metal sector?
We would be bullish on copper, especially given the fact that copper is now broken about that 430 kind of levels. We are looking at targets at around 434, 435 in the near term. Maybe on an intraday basis, you could easily see another 2 to 3 rupees on the upside. But this traction would actually continue for next couple of days time, and that could actually take copper prices towards 430 or 436. One should keep a strict stop loss of 428. I would not go in with a large position in base metals at this moment.
Chirag, how about the precious metals? Because while we did see the gold prices go down, silver seems to be just about holding in the green at this point in time. How would you look at this sector?
I think gold is actually running out of steam. We've already seen gold prices increase by $40 to $50 over the last fortnight or so. I think gold is actually running out of steam. Silver has got a little bit more amount of traction. I believe the silver prices could further rise by another 700 to 800 rupees at least in the short term. I would not build a long position at this moment in gold. Even silver at this prices, I would actually stay away. A fall of around 300 to 400 rupees, I think would be a good level to go ahead and buy silver, but not at this moment.
Vijay, how about the crude? Because that really seemed to be building or had built positions ahead of the ECB. We just saw it's even Steven. It hasn't really reacted to the news per se.
Anisha, if you recall, yesterday I recommended a buy on crude above 4,800, saying I would expect a percent and a half on the uptick, and 48.85 levels I mentioned as a profit-taking target. Now, this is a resistance in the absolute near term, which the bulls will have to overcome very forcibly, if at all fresh buying is to be initiated on crude. Having said that, I think there is a possibility that crude prices might surpass this threshold, but prior to that there might be a marginal dip, and I would attempt to buy the dip. I would buy close to 48.30, 48.35 kind of levels. I would hold these long positions with a stop loss at 4,800. and my profit taking target would be anything between 4880 to 4900. I would start out with a smaller positions, and as and when the breakout above 4900 is seen with convincing volumes and open interest expansion, which tells me that I'm not the only bull buying around in the market, I might just expand my positions thereafter. But right now I would play with smaller positions.
Chirag, what's your sense? Do we see 5,000 coming today, tomorrow, before this weekend?
I think I would agree with Vijay. I would not buy at this moment maybe a 30-40 rupees drop. I think market is, the reason why, our sense is market is not reacting to ECBs. I think they're waiting for the data to come out at the end of the day. I think we could easily see a drop in inventory. Largely, as I said, there was hurricane last week, so 80% of the capacity was actually shut down. We could see a sharp drop in inventory, and that could be one big trigger that we are waiting ahead for. And I believe that crude oil prices is actually poised for a $90 to $92 kind of a rally at this moment. And I think a dip in crude would be a good strategy to go ahead and buy.
All right, so bullish experts here on the panel today. The ECB interest rate cut has come in as per the street estimates, and the commodity is clearly giving you a knee-jerk reaction onto that one on top of it.